Some good economic news. At the gas pump, prices are still falling. The national average for a gallon of gas is now at $4.35 a gallon. That's down 55 cents from a month ago. That's some relief. Still higher than it was some time ago. ABC News business reporter Alexis Christoforous joins us now for more. So, Alexis, how big a deal is this drop in gas prices? How much does it help? And can we expect it to continue?
Well, Terry, you said it. It is definitely some welcome relief for drivers who've been dealing with record high prices. Remember, just a month ago, gas prices were above $5 a gallon. They've come down quite a bit, but you're right. Compared to this time last year, not a lot of relief. We were paying about $3.15 a gallon for regular nationwide this time last year. What we're seeing now, though, is prices have come down in the past few weeks. One thing we're seeing is that those higher gas prices have caused drivers to change their driving habits. So demand for driving is usually very strong during the summer. We're not seeing it peak this summer, so that's helped quite a bit. Crude oil prices also coming down now to just before where they were before Russia invaded Ukraine. So those two things helping to keep prices a little bit lower. But, you know, energy is very volatile, so it's hard to say if we're in the clear here. Most analysts do believe that gas prices peaked last month. But going forward, now we have to deal with weather because the National Weather Service is predicting a more active hurricane season than usual. So if we have a big hurricane along the Gulf Coast and it knocks out an oil refinery, that could definitely impact prices as well.
Some of the big forces there operating, the Federal Reserve trying to figure all this out, right? They're expected to raise interest rates again this week, just after that walloping raise last week in an effort to fight inflation, get it under control. How are they reading the situation right now? What can consumers be doing to prepare for whatever move they make?
Yeah, great question, because I think we can all agree that the Federal Reserve is going to be raising interest rates through the year to try to combat inflation, which is now at above 9%. So this Wednesday, the Fed's expected to raise interest rates by another 3/4 of a percentage point. What that means is it's going to get more expensive to borrow. So rates on credit cards, home loans, auto loans, home equity lines of credit, all going to go up. So here's what you can do right now to sort of mitigate the damage, if you will. You want to prioritize paying down your debt. And one way to do that is get a handle on that credit card debt so you can take advantage of any low rate credit card balance transfer offers that are out there right now. Also, if you have an adjustable rate mortgage, you might want to lock that in, make that a fixed mortgage, or if you're looking to buy a home, maybe lock in a mortgage sooner rather than later. Also, home equity lines of credit can be negotiated. They are adjustable. Talk to your lender, see what they can do for you. And here's some good news, Terry, about higher interest rates. You're making more money on your money for the first time in a long time. So if you have money in a savings account, in a money market account, or if you can not need your money for the next 6 months or later, you could look at a certificate of deposit. Rates on all those things are going to be going up as well. And you know what? Make a budget and stick to it. I know that sounds easier than it is, but get rid of extraneous spending like this, those subscriptions you don't use or streaming services you don't use, and keep that money in your pocket.
That budget, family budget, always the most important thing. And Alexis, the White House says the U.S. economy is demonstrating some resilience. They're downplaying a recession ahead of gross domestic product data later this week. The classic definition, rough definition of a recession is 2 straight quarters of a shrinking economy. What's going to happen, and do you think that amounts to recession?
You know your economics. That is definitely the textbook definition. And we did see the economy shrink by 1.6% in the first quarter, looking for a similar number here for the second quarter. But you know what? Tell that to millions of Americans, Terry, who are struggling to make ends meet right now. A lot of them would actually say we're in a recession already. You know, one thing you see with a recession typically is a labor market where there are lots and lots of layoffs. That's something we're not seeing right now. We continue to have a strong labor market, and that's a good argument for why we may not be in a recession. Some still think that we could avoid one altogether, that the economy will slow down, but not so much that we hit a deep recession.
And Alexis, what does all this mean for stocks? How's Wall Street weighing all this, and what's happening there?
I think Wall Street's trying to figure it out like the rest of us. You know, there's been a lot of volatility in the market lately. This is a very big week. This is one of the busiest weeks of the summer, really, for economic news, because the headliner, of course, is the Federal Reserve meeting. We've got that GDP number you talk about, and a third of the companies in the S&P 500 out with earnings this week. So lots of clues there, Terry, on how higher interest rates and high inflation are playing out throughout the economy.
It really is a confusing situation, and we're glad you're always with us to help explain it. Alexis Christoforous, thanks very much.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.